Please be advised of the disclaimers.
Hey, welcome everyone. So today is October 22nd, 10 p.m. Eastern Time. So if you are watching this video and you are in the chat room already, thank you for being in the chat room. If you are not, I'll show you how to join the chat room in just a second. But welcome to the Pinnacle trading stream. I'm looking to do these videos about every week. So we'll go over current markets, what they are doing right now, where they're at, and what kind of things are going on in the economy as well. And we'll also go over different type of stock picks. I'll look for swing trades. We'll look at support resistance levels, and I'll try to keep it simple. I'll go into a little bit of depth. So depending on if you have the course or not, you might not understand everything, but we'll go over that later on, what the course covers and everything. We'll also go over, I'll also do a Q&A session at the end. So if you do have any questions or any stocks you want me to take a look at, I can do that live. So if you're able to see everything and hear me clearly, just let me know in the voice chat room, but we'll get started right now. And the session will also be recorded and will be posted on YouTube later. So right now we're looking at markets. So we're hitting all-time highs. We're very close. Again, markets have been trying to test that. So if we zoom in a little bit here, let's take a look at today, what we closed at. So we had the stimulus news in the morning. It's been up and down entire week, as you've known. So in the morning we saw a little bit of a run up and then sell off because Pelosi said that they were most likely going to delay that stimulus news and approval on that, and they were going to put it off till later. And then what happened, we got some good news in the market. You went live at 10:45 a.m. right about here. You see the dip, and then that looked like a little bit of a manipulation in the market to wipe people out, and the market started going up. We saw huge volume come in. If we zoom in on this one, we saw huge volume come in on this bar. So when we get back in there, we see that markets were pretty much sideways. Usually we see that at lunchtime, and the market started riding up as a lot of good things were said by her in the news. So what happened, markets just rode that up. And if you watch my other video where I posted on YouTube, if we go back here, and I posted this powerful trading strategy, when not to short. This one goes pretty much over the strategy that I use. It's one from the course. It's just a simplified version for everyone to understand easily, but it's one indicator. It's a 9 EMA. So if you already are in the course, you can see that. But what we have is a 9 EMA take effect over here. So when we see this, we don't want to fight the 9 EMA or the VWAP area, which is the red one over here. We have the 9 EMA in the yellow or the gold color right over here. So when we see that candle, big green candle come over, we don't want to fight any short. We don't want to look to even sell our position, maybe take profits on the bounce. But as it goes up, we want to just ride that up and just let it close up in the green. So when we look at markets on the 5-day, 5-minute, and we zoom in starting on Monday, what happened? We saw a sell-off and we saw that pattern play out. So there's no reason to go long on this because it's been rejected the entire time. And when we zoom into the next day, we kind of see a similar up and down pattern. And then next day we see an up and down pattern all over. So you know pretty much when to short and when not to short. And both are very, very important. But when you see sideways movement like this in the markets, it just means that there's a lot of things going on, and these type of things can really wipe out traders. So we focus on these type of strategies. If you already have the course, you pretty much know how to position size, entry, exit, where to plan stop loss, where to take profits, etc. So that's all covered in the course. But just in general, when you see up and down movement like this in the market, it's a good rule to kind of stay out or stay on your toes. And if you're taking a day trade position, if you're taking a swing trade position, or even long-term investing, you want to just be on your toes when you see market movement like this. So that's this week and today what happened in the markets. Let's take a look at 1-year chart on this one. We'll zoom in a little bit. So when we go back into January, February, March, we saw that huge correction. That's when COVID really hit this deaths and the people who got affected. A lot of those numbers rose and the economy got affected really hard, and we saw that effect take toll all the way into March, beginning of March into April. But markets recovered really nicely. They broke all-time highs and are still over that region. So 338 was the highs over there. We're still over that. We're over 340. But when you look at this pattern right here, let's look at this pattern where I'm highlighting on this one. and then we see a pattern like this on this one. So just notice this highlighted pattern where we see it right here. Markets are they're going up, but not so much. They're really fighting it, and then we see a significant drop. So that was due to news. That was you call it a black swan event. Example of that is 9/11. It's basically unknown events, unpredictable events, just out of the random things that happen in the economy. Could be hurricane, or it could be, you know, terrorist strike like that. Whatever it is, just unknown things that can take into a toll. But there's also some sort of pattern that follows along with it. So if we zoom out a little bit more and we look at the correction from the previous year, and we look at 2019 and 2018, we also see a similar pattern. So what do we see right here? Just not a big high movement. We just see kind of sideways, really fighting, not really breaking, but also not really breaking the highs, not breaking the lows, and then we see a significant drop. So that's what I'm predicting that we're about to see. I'm not a broker or any type of advisor in any way, just be aware of the disclaimers, but that's a pattern that I'm looking for in the markets. So when you see a pattern like that, where you see one right here, when you see it continuously go up, and then you see this sideways fighting movement, and then you see the big red arrow or big red candle follow through, that's where we need to be aware. So we kind of see the same thing here. So notice how markets pretty much hit all-time highs, came down a little bit, they broke all-time highs, and then they fell, and we see the sell arrow right there. So that's kind of what we see over here. We see markets make all-time highs. We see a nice sell-off. That was about a 10% correction sell-off. I thought it would sell off a little bit more, but then we got good news in the markets. We had some earnings as well, and we saw markets go up. And then what happened? We tried to test all-time highs over 350, just couldn't get over. But what I'm looking for right now is just for this 340 area to hold. So when we look at the 5-day, 5-minute, we just see that 340 area hold. That's where I have the red line on this one right here. So going back into the yearly chart, the support levels I'm looking at right now is pretty much right at the 50 SMA. Notice how closely it rides the 50 SMA. Once we look for that to break again, that's where we're going to see the correction. And then when we see a 320, that's the next support. That's where it bounced off. Previous supports are still valid, and when previous supports are broken, like all-time highs, they become resistance. They become support, and when they fall below that support, they become resistance. So when we see the 340 drop, that's what I alerted in the chat room today as well. If you saw in the charts and analysis section that if markets do break the 340 and we see get rejected off of that and break that 320, then we're going to see more of a major correction towards the end of the year into early next year. So that's the market recap on that one, what's going on right now. So some swing trades and long-term trades I want to look at. The first one's going to be Apple, and I'll cover basically chart on this one, analysis on the price moment, and also how to read where the market is kind of going to go with the options volume and etc. So we'll jump into that soon. So let's pull up Apple right here. So overall chart, we had just a quick overview. We had that reverse or forward split. I believe it was 1 to 4 or 1 to 5, and that's where we saw the sell-off after that. That's what I called out on my YouTube video as well, and I was right, pretty much spot on that. And we saw a correction all the way down to about 104, 105 area, and we saw it just break below 50 SMA and come back up again, but it's pretty much been sideways. So we kind of see the same moment on SPY as well. If you see that, it's pretty much just hugging that 50 SMA as well. So going back into Apple, the key support levels I'm looking at right now is going to be that 115, because it couldn't break that level. We also have earnings coming up. That's going to be on October 29th. I believe that is going to be next Thursday. It's usually after hours. So next Thursday, 29th, after hours. And we want to wait for that earnings. So usually what happens with Apple is that it sells off the week before or the same week as the earnings. It comes down, kind of gets manipulated every single time, almost, and we see a rise if it's good numbers or pretty much decent amount of numbers or close to the analyst calls. We see it go up, and it keeps continuing to ride up even after the earnings. But this time I'm a little skeptical about the earnings just because of what's going on with the manufacturing numbers and all of that, and the pre-orders. I'm not expecting it to be strong this time, and also the stock movement as well. But anything can happen. We'll have to see from that. But right now, I'm mainly looking at 115 and this 105 support. The 105 is going to be the big one because that's where it bounced off after that correction, after that forward split, and that's where it came down, bounced off of that 105 area, went up again, but couldn't really get over this 125 and stay above. And we also have market correction kind of going on. A lot of things going on in the market right now, but that's going to be that level that we're going to be looking for. So I'm looking for a potential short. Also have some long position, but if you already have a long position, it's probably a good time to think about exiting, and then just keep some and probably look for earnings, see how that does. And if it does start to drop in the after hours or the day after, that's it's time to sell and then potentially re-enter later on. Or if it does spike after, that's probably going to be another good time to exit, and you might even get a better exit price. So that's just my analysis on that one. That's just my opinion. Again, I'm not a broker in any way, so I can't suggest what to do. So that's the support levels I'm looking for on that one. And let's pull up the Fibonacci on this one as well. And if you don't have this, it's free in the education section. Just scroll up a little bit or look at the pinned messages in the education, and you'll find this Fibonacci script. So this plays really closely as well because we see the 23.6% pullback. So that's a healthy pullback on any stock or the overall market itself. We see that on S&P 500 as well. But the next support is going to be right at 38.2. So that's why I say 105 is the next big support. And if we do see that break and reject, we're potentially going to see it fall down to the 90s level, and that is a solid area to be buying for long term. If we do see that in the correction end of the year, that's going to be a solid area I'm looking for in the chat room. I know we were kind of joking around in the chat room that we're looking for it to go 90s, and it actually could happen if we do see earnings not do so well and we see the markets come down together. So that's my analysis on that one on Apple. So next two things I'm looking for, these are going to be more for long term or maybe a little bit of a swing trade. They're going to be airlines, and we're going to see cruise lines as well. So the resistance levels on this AAL, you can trade Delta Airlines, United, American Airlines, whichever one you like. But I'm mostly like this one just because of the price movement and lower price on this one that it has, and the ROI. So I'll go over all of that. So we see the next resistance all the way up at 13.5. We got volume on this one because of the stimulus news. We had a little bit onto the positive side. So we saw that airlines were looking to plan new routes. They're also getting more funding, and they're also looking to open up more and fly more, and also have more customers coming in. And also just open up to the general. Once COVID comes down and settles down, we're going to see people traveling more, airlines come in, we're going to see oil, all those go back up. So we have a long-term huge potential on this one. So for now, the resistance levels I'm looking at is at 13.5, as you can see the red line over here, and then next 14 and 14.5. But the big one's going to be 13.5 because every time it gets there, it gets rejected. It hits close to 14, tries to get over it. So 13.5 to 14 is going to be very, very important to watch. We do have huge volume come in here. We did have the earnings. They were negative. They were negative, but still we saw that stimulus news today kind of pump it up. We also banks all go up today as well. So watch 13.5 and 14. And based on the ROI, what we see is that it sold off. Once we saw the big correction come in March of this year, we saw AAL sell off from about 31.67, but it was selling off a little bit before that as well, from 59.08. So what do I see? When you look at this chart, we see a huge drop. But if you look at it overall in the long-term chart, we can see that 59 is pretty much the all-time highs. We see it come down from there. But we zoom in a little bit, look at the 3-year chart, we see that we have a huge upside potential to this one. So 13 to 30, next huge resistance, and then 30 to up to 59, let's just call it 60. So we have two areas it can double. So going from 13 to about 60, That's about 4 or 5 times, 4 or 500% return. That's what we call ROI, return on investment. So next area that it can double is right there, that 26-30 area. So when we have the huge upside potential and we take a gamble stake in it or a small position, we're better off doing that when something is so oversold because we have such limited downside potential. So if it does, usually it doesn't go to 0, but maybe drops to 10 or so, that's only about 3 points. But when you look at the upside in the long term, flights are always going to be there. They're always going to be improving. And when we see the upside potential, it can easily go back up to that 30. And it should be going back up to that 30 within a few years, or maybe even less, maybe even next year. If they have the vaccine come in soon and markets make another spike, election goes well, we can see all of that happen in just a year or so, maybe even less. So when we want to look at the ROI return on investment. So we have a huge upside potential all the way 30 to about 60. This area, when we look at it, first area doubling right there, and then doubling back up to 60. So same thing with Carnival cruise lines. You can also go with Royal Caribbean, whatever one you like, but you see the huge upside potential. This is even better than airlines. 15 dropped from 72.7, and the next area doubling is 30, and then 45, 50 from there on. So we have a huge, even bigger upside potential to cruise lines, and cruises are definitely going to come back. They might have more safety precautions in the future just to not spread germs, viruses, etc. But they're still going to come back in the future. So buying something like this with a huge upside potential, it seems like a no-brainer to me, but also put in money on what you're willing to lose. So if you have about some money set aside, I see this as a great opportunity just because of the ROI on this one and the long-term potential. So those are the two. So we went over stock market itself. We did a recap on that. We did Apple analysis. We did American Airlines and cruise lines. So airlines and cruise lines, huge upside potential, well, with limited downside risk. So whenever we see things sell off like that, in 2008 we see banks sell off. I can pull up that chart. That was a great opportunity to buy in. So 2008, we see BAC, Bank of America, fell from 55 down to 2.53. But you see the huge upside potential. Even if you played it on the jump on this one, 2.5 to 20, that's about 1,000% return, 10 times your money on that one, 9 to 10 times. But we see overall that it did come back up. Things do come back up. Long as markets are following the cycles up and down, whether it's correction, whether it's a crash, whether it's COVID like this, when you have something with a huge ROI with limited downside risk, it's pretty much a no-brainer to put some money in and play it carefully, but you have limited downside risk. And the last thing I want to show you today, we'll pull up this chart. So when we look at why I'm looking at the 115, 120 levels, when we look at the options on this one. So if you're using Thinkorswim, you can use this or whichever broker you're using, but you should have the volume and interest tab right here. So you just want to open that up. That's the third one on here. It might be different on yours, but you want to click that and just make sure you're in spread, just in the single options, just the calls and puts. And I usually do 40 to 50 strikes, but I'll just show you on this one, just for this example. So basically, when we have volume and interest, it's basically what people are anticipating the stock to do. So when we have Apple right here, we're trading at about 115.75 right now, so about 116. So it's kind of shows what people are anticipating the stock to do. So this week, what we have is it did sell off. So when we look at the open interest and the volume, there's a lot of puts and we have a lot of calls. But we also have options expiring on the week. So it can move sideways. So when we pull up the weekly chart, we have it just going up and down, but we have it staying over that 115. It's been a big support. So what market makers are gonna do is, kind of fluctuated up and down, wipe out all these premiums on these options, which is why we do a lot of credit spreads in the VIP section and why they're great versus calls and puts. Spreads, credit spreads, selling options, great way to go about it. And that's all covered in the course. But basically what we see is that it's been fluctuating about 115 to 116 area. That's where we see that 116 huge volume in the open interest. And then we see same thing on the put side, about 115. So 115 to 116 is a range that it's most likely going to close this Friday. But next week, when we go have earnings, what are people expecting this to do? So just take a quick glance at this one. So we have 116, 117, but we have bigger volume and we have a huge open interest right here. That's a big ratio, almost 1 to 2, but we don't have anything even close on the put side. So that tells me that people are anticipating for this to go up all the way up to about 120, maybe even 125, maybe 130, maybe even a little bit higher. But do we see that on the put side? We don't even see that. We don't even see about 5,000 of volume in the open interest on this one. So that's kind of a way to look at options and look at what people are anticipating to do. So when you kind of look at the chart and kind of do some analysis and say, okay, we have support resistance levels here, but I don't know what's going to happen, so I'm going to stay out. If you want to take a gamble position, kind of anticipate what other people do in the market, which is very important. We can look at this option volume and open interest, and I covered this more in depth in the course on how to read it and how to take advantage of that using credit spreads, etc. But that's just a quick view. If you want to look at what people are anticipating in the market, that's a great way to go over it. So I'll conclude that over here, but also for anyone who's attending, if you are already part of the chat room, you can join the chat room because this will be going live on YouTube. But if you're already in the chat room, that's good. So you can head over to pinnacletrading.us. The chat room is free to join. You can join clicking that button here. And also for anyone attending today, this will be going live on YouTube later tonight. So until tomorrow, end of Friday, offering a limited time sale on the course. So if you want to learn how to do the charting, how to set up these resistance support levels, how to set up these buy sell arrows, basically how to read option volumes and how to take advantage of selling options, course covers all of that. So there we have trading, we have thinkorswim platforms. We have a huge one-day sale going on. This video will be going live Friday, so we have big sale going on course right now. The chat room is free to join. Head over to pinnacletrading.us or using a link in the description, you can join the chat room for free. And also we have a huge sale on the course itself. If you click on the course tab right here, you'll see that right now it's $397, but head over to the main course site, it's only $247. One-day sale, we have 3 spots open for the course, so first come, first serve. So make sure to grab the discount on that one. This is what the course offers. You can also get a free preview to see how the video quality and everything is, but this is the course content and the curriculum. We have introduction before you get started section, just to get an intro about the stock market, how it works and everything. We have thinkorswim, also NinjaTrader platform setup, tools, how to set up charts and the tools on there. Trading, investing section, so we have day trading, swing trading options, trading 3x leverage ETFs and ETNs. We also have how to invest for the long term, create a powerful portfolio, some of my secrets to you, and some of webinars streams on there as well. So one-day sale on this one, 3 spots, first come, first serve, only $247, regular to $397 price. So make sure to grab that. But again, if you enjoyed this video, make sure to hit that like button and the subscribe button on the video. And I'll be looking to do more live streams every week. So Wednesday, Thursday, about 7 or 8 p.m. We'll decide on the time. I'll usually post what time I'm going live the morning of the day or the day before. But if you enjoyed the video and found this helpful, make sure to please share the video to others so they can learn as well. Hit that like and subscribe button, and hope you all have a good night, and I'll see you in my next video.